Hi there, in this video, we will cover Financial Reporting and Analysis, LOS 23A. Explain the relationship of financial statement elements and accounts, and classify accounts into financial statements elements. There are 5 main elements in the financial statements: assets, liabilities, owner's equity, revenues, expenses. In this LOS, we are required to understand these elements and a relationship between a company's accounts and these elements. A company's accounts show us individual changes in each of these financial statement elements. Before going further, there are 2 terms you should be aware of. First, chart of accounts. This is simply a detailed reference of all accounts. Second is contra account, where one account records a specific business event. A contra account is maintained to offset it. For example, an asset is recorded at its original value. A contra account is set for depreciation, so the asset's real value can be adjusted. Final thing in this LOS is categorization of accounts. Let's start with the category of assets and what we generally have in assets. We have cash, receivables. It means the money owes to us. Inventory, financial assets. Prepayments. It means the payments we paid in advance. Property, plant, and equipment. Intangibles, like patents. And tax assets, both current and deferred. In category of liabilities, we have payables instead to receivables, which covers both trade and income tax payables. Instead of financial assets, we have financial liabilities. Instead of prepayments, we have unearned revenues, which are paid by others to us in advance. And instead of tax assets, we have tax liabilities. Liabilities also includes long-term debt. Next category is owner's equity. In this category, we normally have capital, which is at par value of outstanding common stock. We might also have additional paid-in capital, which is the additional money received from selling the common stock above its par value. After that, we have retained earnings, which company retains from profits and do not distribute. Then, we have other comprehensive income. It means gains and losses outside of normal business. Next account category is revenues. In this, we have sales, the money received from normal business sale activities. Gains, which are the money received due to uncommon business activities, like sale of an asset. And investment income, in which we have dividends received, etc. Next account category is expenses. In expenses, we have the cost of goods sold, selling and administrative expenses, depreciation and amortization, tax payments, interest payments, and losses. LOS 23B. Explain the accounting equation in its basic and expanded form. Basic accounting equation tells us that assets are equal to liabilities plus owner's equity. This equation tells us if there is any change in assets, there must be a change in liabilities and or owner's equity, or opposing change in assets itself, to adjust this equality. And if either of liabilities or owner's equity changes, there must be a change in assets and or liabilities plus owner's equity to hold this equation. This is basic form of the equation. In the expanded form of this equation, we add some details in owner's equity. We know that owner's equity consists of capital and retained earnings. And retained earnings at end of the year are equal to retained earnings at beginning of the year plus net income generated during the year minus the amount paid in form or dividends. Now put all these values in our original basic equation. We have assets are equal to liabilities plus capital plus beginning retained earnings plus net income minus dividends.